The jobless rate took a tumble in September, falling below 8% for the first time in 43 months. So, finally, has the U.S. employment picture taken a turn for the better? Let's talk with Jim Bianco, president of Bianco Research. Jim, always a pleasure to see you. What do you make of this unemployment number? It's still obviously high, but is it significant that it broke below 8%?
It's significant for Washington that it broke below 8%, and you started to even see that in the way that, say, Obama's in-trade futures are trading, that there's been a big reaction in that market to it. But for Wall Street, I don't think that the 8% number is that significant. Where Wall Street focuses its attention on, and it has always focused its attention on, is the payroll survey or the establishment survey, which grew by 114,000 jobs. If I had to give that one a grade, I'd give it a gentleman's C. That's not that great, but it's not terrible either. And that's why I think you've seen some muted reactions in markets. I know markets are up, but they were up before the number too, so they've only gone up modestly since then.
Well, let's stay in Washington, since that's where the story is this month, you believe. Governor Romney, as you know, latched on to the weak jobs growth during the debate. Did the numbers today take any wind out of the sails of his argument?
Probably for the weekend they will, but I don't think they will beyond that, because his argument has been that the numbers have been poor for 2 years, and they largely have been poor for 2 years. The economy needs to generate about 150,000 jobs a month just to hold pace with population growth and immigration. And we are barely doing that. We had 114,000 this month. That's really not going to cut it in terms of getting us to economic growth. And that's one of the reasons why you see GDP coming in at under 2% in the second quarter, and most of the forecasts are under 2% for the third quarter. That's not a good number as well either. So if the focus is how has it been over the last several months or few years, it hasn't been any good, and this number hasn't done anything to really turn that tide.
Some of the revisions we saw July and August, does that give you any cause for hope that we'll get up to 150 here eventually?
I think that the revisions that we're seeing are the back end of the seasonality that we've had. Remember we started the year with very strong payroll numbers, and then we went into the spring and early summer with very weak payroll numbers, and now we're seeing very strong ones again. And a lot of that can be attributed to the seasonal weather patterns we had. We had a very mild winter, which pulled jobs forward, which is why we saw not very good job growth in the spring. And then we saw it rebound again because of the seasonals at the end of the summer. My point is, it's still too early to say whether or not that is an actual rebound. Again, this number's, like I said, I love using grades because I have 4 kids. It's a C. It's nothing great. It's not an F. It's certainly not a B or an A. And you know, it's a C, and you just kind of move along from there and hope for the better.
Are we still seeing people leave the workforce or give up in droves? Are we seeing any sort of improvement in that area?
Well, we saw an improvement in the participation rate this month, and this is one of the few times we've actually seen it stabilize. Now, if you go back over the last several years, especially since the financial crisis began in 2010, we've seen a huge drop in the participation rate in the workforce. People are giving up looking for jobs, and they're just not being counted anymore. That moderated for 1 month in September, subject to revisions. And so we'll have to see whether that one holds.
Treasury yields spiking a bit after the report. Do the numbers seal in the lows for the year?
I think, you know, given that the calendar that we're already in October and the low for the 10-year is at 138, it's probably reasonable that we've seen the low of the year, but maybe not the low of the move, that we could still see a 138 somewhere in 2013. Treasury yields are spiking because, and one other thing about this number is the Fed made its move on September 13th. It announced QE3 or QE open-ended already. So regardless of what this number had, it wasn't going to change what the Fed has done and what we know for monetary policy. That's already fixed. So I think that yields are just moving up the 4 or 5 basis points we've seen today in kind with a higher stock market and really nothing more than that.
Since the Fed's announcement, do we expect to see anything different in next month's jobs report? Will we start to see some sort of post-QE 1, 2, 3 effect in the numbers?
I think that's too early for next month's job report. Remember that the Fed only started QE3 less than 2 weeks ago, and as they like to say, monetary policy works on a long and variable lag, and that's not weeks, that's months. So if QE3 is going to affect jobs, and I have my doubts that it will. It won't show up in the November number. And also keep in mind that the October report that comes out in November will be the Friday before the election. So that one will also be for Washington consumption as well, too.
Absolutely. Jim Bianco, thanks so much.
Thank you.
I'm Rhonda Schaffler. This is Reuters.